Media and Games Invest have closed the books for yet another quarter. This time it's Q1 2022. With me on link, I have CEO Remco Westermann. How are you?
Good morning. I'm fine. How are you?
I'm really good, really good. Now I have a few questions for you. I'm reading here that the overall revenue growth was 27% and the organic part of it all was 18%. What would you say is the main drivers?
Yeah, I think the main driver is our overall business model. As we presented in our last presentations also, we have now our famous flywheel, which is a combination of advertising technology, first-party content, the games, and data. And those three are really extremely synergetic, and we see now that together they're really driving strong revenue growth.
Now, you mentioned in the report as well that Q1 is a seasonally weak quarter. Why is that?
Yeah, traditionally, if you look at the media part, which is now the biggest part of our revenues, media budgets are more concentrated towards the end of the year, so in Q4. And what you traditionally see is that Q1 is the slowest or the weakest quarter, and that it's growing up, or let's say that revenues are getting stronger each quarter. And what we typically see is that in Q1 is in 20 to 30% below Q4. And so in that sense, we did good also in Q1, really good start, but still there is much more to come during the year.
Now considering an organic growth of 18%, it doesn't seem that weak. So what would you say, since this is an effect that affects all of the companies in your sector where you put the media budget, what's your edge against competitors? How do you take market share?
Yeah, at the moment, if you look in we're very strong in-app, and especially in in-app, we see a big effect of the identifiers. So IDFA, which the identifier of Apple, is taken out of the market, and we have seen quite some companies in the market that have really shown very bad results because of without identifiers, advertisers are blind, they are not happy with the results of the advertising, and as such, you see a big shift in the market, where we have well prepared, first of all, for a world without identifiers. So we do contextual, which is our Moments AI that we just recently launched, which is really giving you the possibility to target also without identifiers. But very important here, of course, is our first-party data position. So we have with our games, but also with a very big SDK base where we integrated in apps of other game publishers, a very good reach of customers where we still are able to get the data from the customers with an opt-in, of course. And so our position in that sense is pretty unique, pretty strong. There is other parties, like for example, AppLovin and ironSource, who have similar positions. But what we see is that most media companies don't have the gaming angle, and most gaming companies don't have the media angle. And as such, the combination is really that's what is driving our revenue growth, our strong revenue growth, and also our EBITDA growth. EBITDA growth on top is also being driven, of course, by acquisitions. We do more scale. With more scale, you get more efficient, and with acquisitions, of course, you have cost-saving potential. So those are the things that are on top of revenue growth, adding to further EBITDA growth. So EBITDA growth is even faster or higher than the revenue growth.
We're going to dive deeper into the report. I see that here that we have received a few viewer questions as well. We will get to them. But first, I wanted to address, for us following Media Games Invest, we've noticed a new term in the report. It's called the net dollar expansion rate. Can you explain the term?
Yeah, net dollar expansion rate is a term that is, or let's say definition that is used amongst media companies. And it really says you want to see a like-for-like comparison. The customers that you had a year ago, or in this sense, last quarter or last year, the first quarter, how have they developed towards the current quarter? So it's exactly the same customers. What revenue do they do now? And if that revenue, of course, goes down, then you would have let's say 80% or so, that would be 20% down. We had 126%. 125%, and that means that we have 25% more revenue with the same customer base as we had in Q1 2021.
It looks impressive. Is a 25% growth, then is it what we can expect moving forward, or what's your take here?
Yeah, there's more things that are important, of course. It is also the retention rate of how long the customers stay, which is also very good on our side. and also in how far you can increase, let's say, customers over $100,000, because that's the big budgets and the big spenders. So those are also things that we watch if you look about our KPIs. Yeah, and you asked, how does it look going forward? Yeah, we expect this to further grow. First of all, of course, seasonality. Secondly, we have added quite a lot of customers. On the gaming side, we added quite some game companies, Zephyr, for example, but also many more. And also on the media side, we are adding on a continuous basis new customers. And that together, more customers plus more data, yeah, that drives actually the flywheel.
Cool. Remco, are you ready for a viewer question?
Of course.
Okay, let's go. It's one viewer asking, in your vision 2025, MGI strives to become a white label with its SaaS ad software platform. What can a customer pay per month and year with this new business model?
Yeah, that is just to explain to the people that haven't seen the report. We have now built a whole technology stack, and we started, if you look back, as a game company. As a games company, we said, okay, we are not really efficient on the media side, neither in customer acquisition or selling our products, nor in making money with our ads. And another big problem is the data that we have. If you upload them in Google or anybody else, they also use your data to help other people with it. So that's the reason that we took the decision to build our own media platform, our own ad technology. And we have the vision or the view that this is something that not only we should do, but that basically many more companies should do. If you then look around, some tried, and it's not so easy. You see big companies like, for example, Walmart starting to build its own media stack, and Zynga also starting to do that. But what we see, it's buying or building it is one thing, but of course keeping it competitive is another thing. And if you then look at, for example, the enterprise resource software market, where an Oracle and an SAP have built very strong relations and also strong products with exactly supplying software for companies where it's not the core business of those companies. And that's the view that we have also on this platform. So we think that also our platform would work very well as a white label platform. We already also, I mean, it's not just an idea, we're also testing it at the moment with certain customers, and think that there's a big market. So it's an on-top business model. It will not change our basic business model. We will continue that. But we think that, yeah, if we roll this out, we will really get a very additional, very interesting income stream. And yeah, how much this is per customer is difficult to say at the moment. Now we are taking a cut of the media revenues that are going through the platform. If you go into a SaaS model or white label platform model, it is that you take yeah, let's say fixed fees or fees per seat or fees per technology transaction. So the total revenue will be less. But on the other hand, we will also not have media costs and other parts that are coming in. So we expect that it will really substantially add to profitability, but it's too early to say or to give exact numbers here.
So a follow-up question here. I had written down a bit about your acquisition. We talked about it before, Access in Motion, a mobile games company. Now MGI is an advertising software platform with its own first-party games content. And with this acquisition, you add further first-party content. Why is first-party data important for you?
Yeah, first-party data is important in a world without identifiers. I mean, it was already important before because you have more access to your customers. You can also get more data than if it's just a passed-on identifier or data that are linked to an identifier that's passed on, to formulate it correctly. But first party gives you, of course, a lot of access. You can really explicitly ask for opt-ins. You can ask for specific information. And altogether, it adds to what you have. And you can, with that, also serve your customers better. You can really give them ads that are what they are interested in and not totally strange ads. And in a world where identifiers are, let's say, going out, to have this information and to be able to also train our artificial intelligence routines on the customer base that we have, on the data that we have, and then with those trained routines, then to go into the open internet and to look for similar patterns, that makes a company in this world where identifiers are not widely available anymore, extremely strong positions. So we can target well. We are still effective or are effective on the media acquisition that we do or the customer acquisition that we do, and we can also with that target our ads better. and sell them better. So that's the whole benefit of having these first-party data. And Access in Motion adds in 700 million downloads. They're specialized in racing games and are really good also in launching them. So we expect further growth of the company itself. But it also has a big synergy for our media part, of course, then.
Remco, moving on with the acquisition trace here, I have a viewer that has stated here that the market has changed and it's become more difficult to raise capital. I agree with that view. I think many investors are concerned about the questions of a recession. How well prepared do you think your company is, and how does that affect the possibility to make further acquisitions?
Yeah, I would say every market phase has its challenges and benefits. The advantage, if we go into recession, which I don't hope, by the way, but there is a likelihood that we might be moving into recession. But the advantage is, of course, that M&A becomes a lot cheaper, that also companies that are strongly positioned, like we are, have the possibility to really outgrow competition and to grow stronger. And for example, in a recession, normally companies cut their media budgets because in insecurity or uncertainty, that's the first thing where you can save money. But what we also see is that with our position in the programmatic advertising field, that's the most efficient way of spending marketing money or media money. So what we also already in a normal market see is that there's a shift from traditional advertising to digital advertising to programmatic advertising. And what we saw during COVID, that the shift got faster, and we expect also in a recession that the shift goes faster. So the ones that will suffer is more the traditional advertising companies, and we on the side of the programmatic will also still profit from it. So we expect that it will rather harm the speed of growth than that it really will harm our market position. But those things are happening, and on the M&A side, it used to be a seller's market. And it has really strongly already now becoming a buyer's market. So M&A is cheaper, there's less competition for M&A cases, and that makes it, of course, more attractive. And then indeed, in the question you posed, it's about having money available. Doing capital increase at the moment is expensive. I mean, money has become more expensive, interest rates have gone up. So that's also something that you need to look at. And to give an example, with the Access in Motion acquisition, we decided to raise part of the 55 million purchase price that we paid as a capital increase, because we also didn't want to get our leverage higher. The good news is that we have over 100 million euros available for acquisitions, so we really have a well-filled cash bolster. But we also, of course, are watching the leverage, that we don't get too high on the leverage. So we want to keep our leverage between 2 and 3. So there's a lot of things that are changing. I mean, dramatically changing since the market, how it was half a year ago. But I think it's we see it as a big opportunity to further grow the company and to go forward.
Talking a bit about the leverage, we have also a viewer question. There are a lot of them coming in right now. The buyback of the bond. First, can you explain a bit more about that? And is that to reduce company interest costs, or is it just a non-event?
No, we didn't buy back a while ago of a German bond, which was just, I mean, we didn't want to have too many bonds in different markets. We have now one big Swedish bond, which is listed in Sweden. And let's say it's also listed in Germany, but it's one bond. It's the 350 million bond that we have. And yes, we are always looking, of course, at what is the ideal finance structure. I mean, till maturity, it's still a long time to go. So in that sense, there's no acute needs or things to do things. But of course, we continuously also talk to banks, for example, to see if refinancing at a certain point makes sense. So looking at financial markets, it's important to see what are the possibilities. And I think that's the best way of looking at it.
I think that's a good answer to a great question as well. Remco, I have one last question that I had written down before the interview as well. There are a bit of governance changes that you announced with your last report. What's the status?
Yeah, we're further working on those. So the first thing, let's say, why are we doing those government changes? We have been growing with 77% CAGR in the last 3 years, so the company has become much bigger, has also got another investor base. And with that, of course, also investors ask or expect a different governance. Plus, there is the possibility that we might want to uplist to another segment. So that's, for example, the reason that we're working on our internal control systems. We do that with one Big Four auditor. We're almost finished with that. So that's a big process that was internally going on. But also to the, let's say, on the board side, we're taking measures. So we have installed a nomination committee. Nomination committee existing of the 3 largest shareholders, which is according to the way it's done in Sweden, because we are moving to Sweden, of course. And so that's been installed. They will come now with their proposals. One of the proposals was already earlier discussed, that we extend the board a bit from 4 to 6, but also get some board members on board that reflect better the markets where we are. At the moment, we don't have a Swedish board member, for example. So those are things that we're working on. There's a lot of optimizations that can be done. And the next AGM, which we are preparing at the moment to send out the invitation very soon, we will see that those proposals are on the agenda, and that after the AGM, they will also be implemented. One of the changes, for example, is also that I will step down as chairman. So basically that I will continue to be CEO and very motivated CEO, and I will also continue to be a member of the board, but somebody else will take over the chairman role on the board, because also that is not seen as perfect governance to have a chairman and then a CEO being the same role. So those are things that we're working on. We're listening to our shareholders. I think that's important. There's a good dialogue with our shareholders, and we improve things that we can improve.
And I'm so happy that you're listening to me as well. I'm stoked about having you moving here to Stockholm and potentially having you physically here in the studio instead of over link, Remco.
Yeah, I'm looking forward to that, actually.
I want to thank you so much for taking the time, answering my questions, and looking forward to next quarter.
Me too. Thank you very much, man. Thanks.